largest crypto I will fire Gary.
Hi guys, welcome back to BlockTalk, and here we have the recent happenings of crypto, and we have Vaishnav, Kumar and John here to speak about that. And the first segment that we are going to talk about is Kinto. It's a DeFi project which has been shut down for good after a fatal exploit. And let's see what all the opinions about this news from our guys.
So, Kinto, being a very promising DeFi project, has announced it will conduct an orderly wind down after an exploit, which resulted a loss over $1.5 million. And the team also had an attempt to restart it, like by having some bailout offers happening, and they were also approaching some other lending platforms to buy their shares, their token reserves in return, and they will also use that funds to reimburse the users, but that failed. And those rounds being failed, they are now focusing on responsible exit. Now they are giving back 76% of the principal amount back. Like if you had staked around $100 worth of assets in Kinto, you would be getting back around 76% of it. Another highlight is that founder is also contributing $55,000 from his own pockets as a goodwill grant, and each victim can get the grant at max cap of $1,100 per user. So why this is in this week's news is, after a lot of exploits, most of the crypto companies like shut down to run, or most of the times they don't even compensate their users properly. They just say the exploit has happened, the money has been vanished, and nothing can be done. But Kinto actually trying to do something good and trying to recompensate their victims. It's
just compensate.
Yeah, it's just yeah, it's not recompensate, but so that's a good sign which is happening. But people are furious actually, as you know, like people losing their money, it's always happening. But crypto users do also know that exploits are always has become a new normal. Like they do know the risks which are being undertook if you are participating in a DeFi project. And nowadays, every crypto user is well known, like they do know if exploit happens, what can be done, what cannot be done, and what can be got back from the owners of the company. And they also know how to approach this legally via the legal recourse actions which can be taken by the users.
Domino effect is to show that what is the cascading effect that is possible. If something falls, this fall is affecting the next fall. It's a starter for the next fall. That fall is the starter for the next fall.
Yes.
So that ends when there is nothing else that can fall. Right? That cascading effect is what we call as domino effect in an easy way.
And in this context, domino effect is in the sense, when an exploit happens to a protocol, the very next thing which then again falls down is the liquidity reserves of the protocol. Because of the lack of liquidity reserves, no trade can happen in the app. As there is no trade happening in the app, people start to exit the app, sort of bank run, and the protocol also does not have new avenues to generate profits and revenue out of it. So this is how domino effect happens when an exploit is being done on an exchange.
My question is, what is so special about this Kinto project? Because it's a normal fatal exploit, right? So what's so special about is someone is coming to like save this, or the exploit they are coming to save it, or something like that, or the CEO itself is coming back?
Yeah, that's what, as we mentioned previously, the founder of the project like giving out $55,000 out of his own pockets, which is not a huge amount if you say so, but still from a single point of contact, that amount is pretty good. Like
Yeah.
so
No, I don't know. You're just looking at the scale of numbers. But look, is this the right way that the industry should move? The discussion should be there, I feel. Right, the company made, let's say, $55,000, as I said, and he's putting $1.5 million or something, they made a loss. And he is covering, let's say, 1/3 of the money from his own pocket. Okay, fine, everything is okay, right? But what happens to his career? This industry doesn't have so many tech heads or tech nerds who understand this subject, right? there are no regulations around it. Unlike if the same kind of thing would have happened in a bigger industry or a recognized sector, or in something in a stock market which is already listed in a stock market, the government would have come in, to bail them out of such a scenario. Because these companies are just not companies; they're the economic drivers of a country's economy, right? So if something is too big to fail, and the governments actually step in to bail them out, at least not entirely, but at least for a certain period of time where there is a repayment plan that is in place. Whereas in crypto, unfortunately, there's no regulation as such. There's no government. There's no jurisdiction that people work out of, and that jurisdiction doesn't recognize these cryptocurrencies, right? And insurances, again, there's no insurance company would give insurance to such kind of companies, right? So the entire ecosystem has to evolve. I'm not saying there are very good safety checks that are already in our traditional way how our money works. So I think a little bit, not entirely, but some essences from that traditional markets can be taken into crypto space, where people like Kinto, we would have heard every day there's so many cryptocurrencies that come into the market, they just vanish, right? There's no one to ask them, right? There are people like Kinto who are saying that, they're trying to hold their credibility, right? They're trying to build their credibility, saying that, yeah, loss did happen, it did happen because of us, and there's the thing that we could do from our end, right? Let's say if every project has this kind of mindset of people, I think the industry would move a lot forward, right? Unfortunately, because a lot of things are not in place, they have to take this loss, and it's a good thing, because if they are taking up this loss and they're paying the customers, they still are holding on to their loyal customer base, right? Even if tomorrow, if they are able to pay off partially, or at least if they have a repayment plan to the customers, the credibility increases. There will be some investor who has a lot of free cash who would invest into this company, take over this company and their liabilities. The valuations would go up. They would diversify to different projects, right? So basically, this guy would get a little more extra breathing space, to think a little bit more about the company, rather than just to grow the company, rather than repaying their investors. Right? That's my opinion.
Yeah.
There's nothing wrong, right? But yeah, overall, the ecosystem has to change. There has to be some support from insurers, from government, from agencies. That is what is required to boost this industry.
The next segment that we have is a massive JavaScript security flaw has been exposed by billions of web users. And here we have John to explain what is the real scenario.
Yeah, actually, last week, the massive attack happened on the NPM package in JavaScript supply chain.
What is it?
It's an NPM package. NPM, yeah, Node Package Manager.
Node package.
Yeah, it's handled the whole JavaScript files, code and all. So we can able to write a code some sort of way. It helps to developer to do fast production way to build a product. So one of a developer who built the NPM.
Okay, so the packages which was affected was Chalk and debug.js.
Yeah, both of package got affected, and then the classic way, the email phishing way, the attacker actually crafted a mail to send it to the developer who made that package. He thought it's come from the NPM package and give a credential to that attacker. After the 2 hours, the attacker made some code changes and all, then pushing updated code into the cloud and NPM and all. User got affected, and then after in that update, they made one crypto clipper. What is the crypto clipper? Actually, while we copy some any wallet address at the time, actually instead of that actual person's wallet address, the Fisher attack address will be changed instead of the actual user's wallet address. Instead of going the money to the user's account, it will go to the attacker's account.
So you're saying, is this getting a little too technical for me, like a layman like me? So you're saying there's that kind of typical scam that happens, that Paytm QR code scan, There's a QR code, and there's a QR code that you have to scan to pay.
Yes.
And without the notice of the shopkeeper, there's a guy scammer.
Yeah.
He prints one more QR code that fits exactly the size.
Yes.
And when that person is not noticing, he just goes tricks it. So whatever payment goes to the scanner actually doesn't go to the shopkeeper, it just goes to this guy's account.
Yes.
And this scam goes until that shopkeeper realizes there's the scam and he takes it off.
Yes.
And he's not able to trace this guy back because that QR code doesn't have any user information stored on it.
Yeah, correct.
Right?
It's in the same way. But at the time the shopkeeper gets some sound from that machine. But here he won't get any sound, right? So somehow that
No, until that shopkeeper, that person realizes it, the scam continues.
the money the users pay, it go to that attacker's account.
In this scenario, they just changed it to the address. The wallet address, the receiving address was changed.
Yes.
Without the notice of that person.
Using of the crypto clipper
Okay,
only.
okay.
Actually, the fun part it is nothing have been stolen from that user side. Actually, around 50 worth of Ethereum, $50 worth of Ethereum. That's only they took it out from that user side.
Oh,
That's why this got get into the market. Then it's people walking as a funny thing. They
Got it. I mean, of course, it's not about the volume of that. In a previous conversation, we were thinking, where I was saying that it's not the volume of loss that happened or someone recovering. It's the path, right? It's $50 is possible. What if this was $500 million?
Yeah.
Right? By the same method, if you would have made $500 million, maybe this news would have been even bigger. Right? So it's just 50 right now. I think you should people have to notice this. This is possible. Make necessary security changes even when we are making transactions.
through the
To be very cautious about such kind of incidents. And we, as CoinDairy, are trying to get these kind of small incidents that is happening across the world to our viewers.
Yes.
So they're also well aware and informed about that this is possible. It need not have to be $500 million loss or 5 million, even 15 million, but there is a possibility. And people should be aware of it.
Yes. He had an unprecedented access to so many global developer workstations. He could have done other sort of attacks and got user data and credentials. But
Even now he can do it.
no.
Who knows, he's just waiting for the right time. to do it,
Okay,
right?
you are saying like that.
It can be possible.
But security landscape is always evolving and it's always a rat and mouse game or cat and rat game, you can say whatever. It's always chasing the bugs and squashing them. And
actually, my question is, don't you think it's a wake-up call for developers, John?
actually I'm also a developer. Before
We wake them up every day. Every day, after 5 minutes, they go back to sleep. They say we have bigger problems to solve in this planet.
actually developers who watching this podcast, before downloading any npm package, please aware it, go straight, check it out.
It's a good note, man, at the end, yes.
Don't do npm install what are the ChatGPT events and that. Please check it and then install it. It will affect your product, your users.
It's too much to cover in a single video. You are more interested about this part, this section. You can actually you can put a comment on our comment section. We need to listen to John more. Right? So John is going to make an exclusive video just about this.
Okay, the third news that we have here is Hyperliquid kicks off a bidding war for its new stablecoin, that is USDH.
so Hyperliquid, as you know, is a permissionless DEX which runs on Arbitrum as a layer 3 protocol, and it has had a massive growth in the past months. So the growth was because of the community behind it. And whatever revenue the DEX makes, most of the revenue is being channeled into the DEX itself, again back. That revenue, the revenue and the profits which have been made out of the DEX is used as, there are only around 10 employees in the company and they split it among themselves, plus the rest of the amount is used to buy back the exchange's own token, which is known as HYPE. And that HYPE token has shooted from a starting price which was around $7 to recently now it's around $40, it's floating around. That kind of growth came from the buyback mechanism which is happening over here. So community actually loves this concept. Now the thing is, whatever stablecoin is used inside the DEX is USDC, which is issued by Circle. So Hyperliquid handles around $5.5 billion of USDC to
Every
Huh?
They had its 5.5 billion.
This is the average total deposit which is inside the DEX itself.
In 1 year, 1 month, 1 day.
No, the total deposit
Overall,
is the
in the lifetime.
Yeah.
Okay.
The current deposit value of stable coins inside Hyperliquid is $5.5 billion. And this is being issued by Circle, right? And Circle earns a steady rate of yield from the treasury bills yield. And this yield goes for Circle itself. This yield goes for Circle. This is not for Hyperliquid.
So that's why they're building a own stable coin.
So by introducing their own stable coin called USDH, what they can do is they calculate that around $220 million is the yield on the $5.5 billion deposit. So this $220 million can be again taken inside the DEX itself without going to Circle. And this yield is almost pure profit. This can now fuel the...
I can see Nisha being very puzzled. Don't you think so? Nisha, are you able to wrap your head around these numbers and this concept?
Yes, it's too much of numbers.
But can you simplify this for us?
Actually, it's kind of a stable coin that a company is launching, right? Yes. So why all of the companies are focusing on one stable coin particularly, like launching their own stable coin? What are your thoughts about it?
That's what I'm saying now. Because when you use other companies' stable coin, the yields is being taken by other companies. You don't get that yield, the whole yield. They just give a part of the yield. By having your own stable coin and starting to buy treasury bills and all, the other part of the yield can be taken inside your ecosystem. So it becomes your money.
Okay, I kind of understanding it. Like if you have to drop parallel to the traditional markets, I don't know if it's not the exact reference.
For them, right? So that's why they are launching their own stable.
Yes. And that yield...
No man, the concept is nothing. No, like if you have to draw parallel to what he's trying to explain, I don't know if it's right. You just have to correct me.
Yeah.
Like US dollars is like we Indians, we buy oil, crude oil. We buy crude oil through what? US dollars. Yes. Correct?
It's...
If they give Indian rupees, will they buy it? No. Now, Russia and US are two whatever, right? They're like enemies, whatever you call it as, right? Now Russia also is selling oil. Then now because of the US sanctions saying that you should not buy oil from Russia and everything. Now Russia is saying that you guys can buy oil not just with US dollar, you can buy it with a different currency, or you can use my own currency, so you get a better price. Right? So that country's Russia's currency will definitely improve because the demand for the currency increases, because there's always demand for oil. And the Russian oil, if they have to buy, Russia says you have to buy it with my currency for you to get a better deal, right? So US dollars is not going to be used anymore. So neither Russia nor the client who is buying Russian oil will be stocking on US dollars to buy that oil, correct? So the value of Russian currency itself is going up, right? Because the demand has increased. So I think that kind of similar mechanism is what Vaishnav is saying. So they're saying that whatever you trade, whatever this thing you do it here, use our own stable coin that we are offering instead of using a stable coin of a different company on this platform. Why they're able to offer this kind of stable coin concept is because they have such big volumes. $5.5 billion of volume is happening on this thing. So it makes sense for them to have their own currency, because they also can save money, right? Instead of interoperating with a different company, they can have it in-house. So probably I think that's are you trying to explain this thing? I mean, I don't know. Is this how traditional markets work? Like, is it similar to this? What are you explaining?
It's similar. It's 60% similar, because when you come to crypto markets, this money is programmable money, and additional sort of risks happen. Like apart from the accounting, like having our own in-house stablecoin eases up accounting, one thing. It also reduces the bridge risk. If you are using some other else coin, you have to bridge it from one place to other place. So you also take off those risk
ambiguities of the business, right?
You don't know
you don't know when that will get stuck or will it pass through or not. You don't have the control of your own money because the control is a different company.
And having additional yield profit to buy back Hype token is much more bullish news because people already love the buyback mechanism. You are getting extra bands of cash to buy back your own token. It would boost the token's price again.
Correct.
So people are so happy about it. But another thing is, Hyperliquid does not want to handle all the regulation and compliance risk of this. So they have opened up a proposal where already existing stablecoin companies can handle the operations of this coin. And now proposals are pouring in with various kinds of terms and creative.
No, that's how everything. No, even governments.
Yes.
Like Indian government doesn't say that I am going to issue currency. They can't. They have their business or any government's business, even Russia, whatever you take it as, or Hyperliquid as a company. Their work is to grow the company, grow the user base, grow their volumes. Right? They don't want to issue stable coins and run around it.
Yes.
Right? Even with India, right? The government of India doesn't issue this thing. They have an agency called RBI who just takes care of this matter for this company, right?
Yes.
And they own shares in that whatever that thing is, holding company, right? So probably Hyperliquid also doesn't want to do that. They don't want to take this headache of creating a stable coin and giving it out. I mean, there are Paxos and all these things. They have done very good models earlier. They have scalable models and they have been in this industry for a while.
Yes.
And Hyperliquid is purely a DeFi project and they have exchange running. Why would they have to move from their core business and get into something else? Right?
Yes.
And it's better just to outsource it to someone who's good at the industry, and that's a good call.
Yes, absolutely. I agree with this point. And another fun thing to watch was like CEOs of these stablecoin companies, even to put their proposals, there is no official structure in Hyperliquid. Everything runs around community. And this community's main space is Discord. So in Discord, they were checking their ranks. By putting comments, they were checking their ranks, like have they reached at least rank 5 to post the message in Discord. That was fun to watch.
Vaishnav, just to resonate what you just told earlier, crypto markets work very differently than traditional markets, right? There's also a true example of that. Where in traditional markets, if let's say stock markets, there's shareholders, there'll be meetings, annual general meetings and things, right? To voice out their opinion and say what is the due course of action the company has to take, right? They take that voting, all those things.
Yeah.
In crypto space, that entire thing is called community.
Yeah.
A community is your stakeholders for that token. So that's the right way to go right now. I mean, so modern problems needs modern solutions.
That was a good cover up of this.
The fourth news that we have here is a $4.65 million rug pull on the Solana network has shattered the rest, and the name is Aquabot. And yes, Vaishnav.
So let's get the background of Aquabot. Aquabot is a trading tool very similar to Axiom, Phantom, Bullex, which is used to trade on Pump Fund and other meme coin pairs at very fast execution rates. They get tools, and these guys raised $1 million in their first public rise, and they had very good partnerships with Helios Labs and other Solana companies. But still, recently they just silently siphoned off $4.65 million of user funds from their contracts, and this has been verified to be separated among 4 wallets, which is being owned by the Aquabot team. And they also had an audacity to post another pre-sale tweet on their X feed, raising more funds. So people are questioning like, we are not blind, like we do see the funds being transferred among yourselves, what's going on. They are asking for an explanation, and this also highlights critical work.
Did they give any explanation?
No, not yet. They are radio silent actually. Their page is just abandoned. It's not banned yet, but there is no tweets on it. And it also highlights critical vulnerabilities in the Solana ecosystem's vetting processes and the persistent problem of scams. See, people always in crypto, they can't gauge trust on seeing someone because most of the teams are anonymous teams, if you see so. They just take trust on the basis of the partnerships which they do. But still, having good partnerships does not mean that the team cannot run away with your funds.
In today's episode, the first news and the fourth news is so contrasting. The first news about Kinto, what we're discussing, there the founders are trying to scramble their personal assets.
Yes.
To repay the loss that was incurred on their company, on their platform. And in this scenario, fourth news for the day today.
Aquabot.
the Aqua bot guys, they are using customer money to to fill their own pockets.
Yes.
This industry has such extremes. Extremes of people.
The first news was completely what I heard about it. It's a zombie rug pull thing, and they just went off after the scam.
They're radio silent. That's what I say. They're not talking anything. They're not saying anything. And people are demanding an explanation. It's their hard-earned money that they put in, and they're taking it into their personal wallet. And why would someone do that, right? Or is it done for some security reason? Okay, give us an explanation. They demand, when explanation is not given, then of course, even if it's not committed, but still it's been conceived. You are trying to do something and not giving a right explanation. So even if you're not trying to do something, this can be taken as you have done something wrong.
Yes.
Right? There's a big proverb. I am not able to get it straight out.
Do you think this is a part of Solana? They very rules and regulation for this kind of bot and these people to
say what is my point of view is we can't have rules in a decentralized network actually. Like the more rules you bring in,
Solana also can give that framework rule.
Yeah.
Right? Now what you do inside the framework, again.
can't control it.
Yeah. And today Solana is so big because they have kept it so open that so many projects are being able to launch from Solana because of that
openness. Yeah.
You try to make it more rules, more rule based. You make it to this thing. But how will people launch anything from your platform? Like today we have this Apple and Android always a fight, right? Apple Store and Play Store. App Store and Play Store. App Store has so much of rules that you have to build it in specific.
Yes,
right?
yeah.
And so many apps just get rejected and you first go. And Android, you post anything you want, right? They just gets accepted by the editor.
So it's the cost of the freedom. It was a very good podcast. Extreme news which we saw here, and we also got to know some mechanisms of the normal world and how funds do move around there and how it is different in
And we are also trying to get kind of extremes into a single video so that people know that where we are.
Yeah.
This industry is at extremes. It can go extremes. And there are people who are also trying to, try to maintain a balance within the ecosystem, like how we are trying to do it. And by getting the right information, timely information to our viewers, and that could help them take better decisions. Investment decisions is what we are aiming for.
Yeah guys, that's it from us today, and signing off, this is Nisha. We have Vaishnav and Kumar and John. We'll see you on the next week.
Thank you.